This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is on Back Roads of Illinois Today. I am Cesar Delgado from Today. It's uncertainty within the fertilizer space and payment for the fertilizer side. What about the fertilizer markets in central Illinois with uncertainty in the field? I am joining with Curt Miller from United Praire in Talana, Illinois. The fundamentals are pretty tricky to the beans markets. How concerned about the fundamentals from the beans markets? The trade barriers and demand for the beans. Corn markets is stuck on the fundamentals. We were talking about it with Mike North from Evrag. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. It's uncertainty within the fertilizer space and payment for the fertilizer side. What about the fertilizer markets in central Illinois with uncertainty in the field? I am joining with Curt Miller from United Praire in Talana, Illinois. Hey Curt, how are things with the harvest season in central Illinois?
Good morning. Yes, things are good with harvest. Beans are, pretty well wrapped up and really headed in the direction to be finished up with corn the end of the week or middle of next week for the most part. There'll still be a few stragglers, but I'd say by the end of next week, things will, weather pending, things will look pretty bare.
Good to hear that. Curt, let's discuss about these prices in the fertilizer space in central Illinois and McLean County. Could you tell us what's impact on the trade deficit for right now with the fertilizer space?
Sure, I can definitely hit on that. I'm really going to start talking about the one that's really in the worst shape today, and that is phosphate. Whether we're talking MAP, DAP, or triple, the phosphate market is the one that's the most out of balance. So when I look at pricing or look at fertilizer, I look at how many bushels of corn it takes to buy a ton of each crop nutrient, and then I've tracked that data for several years. So we've got an average. When you look at phosphate, the average over the last 5 years, it's 150 bushels to buy a ton of MAP, and today we're at 202 bushels to buy a ton of MAP. So it's a record high today. When you look at the reasons why, so most of that is because of the supply of all phosphates today is at a deficit. The market really needs a 20% reduction in demand to get supply back in line and hopefully bring things back to close to the average. To say we're going to get back to the average on phosphate, I just don't see that happening anytime soon unless we would see a significant rally in the grain markets. When you look at potash is real close to the 5-year average as far as how many bushels it takes to buy a ton. Nitrogen anhydrous today is just above the 5-year comparison. So 5-year comparison for anhydrous is 176 bushels to buy a ton. Today we're at 191. Looking back at potash, the average is 112 bushels to buy a ton. Today we're at 114. So like I say, potash is still a favorable buy, even in today's world.
How is the nitrogen cost now in P and K? Because last night they are disagree with Canada. What is your thoughts on it?
Can you repeat that question, Caesar?
How is the nitrogen cost now in P and K? Because last night they are disagree with Canada. What is your thoughts on it?
So when you look at, I think if I understood the question right, if I'll answer it, and if it's not, try again. But when you look at nitrogen, not a lot of nitrogen comes from Canada, but a lot of potash does come from Canada. And we've not had much trouble getting product um, to our terminals or into the US this fall season. As far as nitrogen supply, when you look at nitrogen today, there's a lot of talk, right? UAN, I didn't touch on that one. UAN to me is high priced, especially when you look at it compared to the other nitrogen. So 32% UAN right now is 25 to 27 cents a unit above anhydrous ammonia. Um, that's a pretty good spread. It's going to encourage growers to want to get fall anhydrous done. And if we have an early spring, it's just going to lean some growers that direction that may have used UAN in the past. Obviously, the industry can't handle a whole lot of change just because anhydrous is the logistics with anhydrous can be very difficult from time to time.
How is the beans yields for this year in central Illinois?
If you look at soybean yields, um, and I'm not gonna talk about double crops at this point, but just regular soybeans, we've literally heard yields anywhere from 45 bushels to 95 bushel soybeans. And again, I'm talking about our whole trade territory from, south of Interstate 70 to almost Interstate 80. The folks to the south just had a pretty tough year this year with, starting out with some late planted soybeans because they were so wet. And then once they got in the field, got everything planted, didn't get any rain afterwards. And that's just a tough spot to be in. And there's some areas in Champaign County that went for several weeks without rain and had some tough soybean yields. At the end of the day, all things considered, I think we need to be thankful for what we was able to harvest.
How is the corn yield as well in central Illinois?
Really, Caesar, it's the same story as soybeans. Again, yields were all over the place this year. Again, the folks to the south struggled. Same reason with soybeans. They had late planted corn, and once they got everything planted, pretty much didn't get a whole lot of rain after that. So, but yes, yields were for the most part corn. I think favorites, was more favorable than soybeans, but yields were all over the place.
Do you have any final thoughts on next steps in the fertilizer space?
When you look back at fertilizer again, we talked about MAP and the phos and talked about MAP DAP and on all phosphate supply being depleted. If we are seeing some reduction in demand and hopeful that will help get things back in line. But like I say, we're going to see the grain markets change and rally to really get things back in order. To sit here and think that your reduction in fertilizer price is going to get us back in line by itself I just don't think it's a huge possibility at this point.
Thanks, Curt. Maybe I will see you on January at the annual meeting with Illinois Chemical and Fertilizer Association on January.
Yes, I will be at the IFCA show in January.
Curt Miller from United Praire. The trade barriers and demand for the beans. Corn markets is stuck on the fundamentals. We were talking about it with Mike North from Everag. Hey, Mike, how are you?
Doing great. Finally getting a little bit of cool fall weather. Harvest is coming along quick, and I'm going to try to find my way into a tree stand this weekend.
Are you a hunter?
I am indeed. I was up in Alaska in August with my brother, and we had a very successful caribou hunt. And now with the cold weather, I'm hoping to get myself into a tree stand and put an arrow in a nice whitetail buck. Heading out next week to go do a little pheasant hunting in South Dakota. So I try to find my way outdoors as much as I can when I'm not at a desk.
I was unsuccessful to get a doe.
Well, you got to put some scent out there, Caesar. Get that girl coming in. Maybe you need to plant a food plot even. That would be great.
Yeah, with cover crop.
You bet. You bet. Put some foraged soybeans and some turnips out there, and you'll have all sorts of deer coming in. You'll be trying to keep the hunters away.
Mike, let's start with our conversation about the fundamentals on the corn markets. What is your thoughts on that?
Well, let's start where things ended, and that was with the quarterly grain stocks report, the last official USDA report to come out before the government shutdown. Ultimately, what that report showed us was a smaller feed usage number that will show up in the WASDE report whenever the next one gets released. We estimate that north of about 400 million bushels will have to be added back into the equation based on last marketing year, and then couple that with the current marketing year. So that adds a little bit more buffer to the marketplace. Of course, going into the shutdown, the last report said we had this really big corn yield. I think some have put that in question, but when you lay that against the bigger ending stocks number, and then you draw some mathematical analysis against the yields in what we'll call peripheral states, laid against some of the inconsistency in the I states and the heart of the Corn Belt, it creates a little mystery on how much the USDA could actually cut. But it feels like only a few bushels. So that's why this corn market felt so burdened by inventory and really struggled to really push itself any higher. Of course, soybeans giving a little bit of support to the corn market as we, wait on the potential news of a deal with China. But even that has fallen short and only allowed the corn market to really, bring another 10 to 15 cents back to the table.
How about the technical side in the beans markets for this month without these reports, Mike?
Well, if you look at the nearby contract in November, we had some moving averages that had been hanging over the head of the soybean market since about mid-September, and we finally broke through that earlier in the week, and from there, we're able to gain some strength going into the end of the week. Friday, of course, giving back some of those gains, but still above some of those moving averages that had been a bit of a ceiling for us. And as you look, bigger picture and go back in time, stare at a weekly chart for a little bit of time, you're going to find that 1080 has been a very difficult number for us to break through over the course of the last 16 months. And as we talk about that, it is going to be a stumbling block again if we can continue down this rally, the path that we're on right now. So I think as we start to get a little bit optimistic about soybeans and hopes of a big export deal, we have to be careful that we don't get too overly optimistic. And there is a overhead resistance line that runs right over the top of this market right now, kind of stretching across this year's highs and falling in around that 1060 zone. So we got a little bit of resistance. I would say roughly every 20 cents up from here, all the way to $11. And the market is starting to show some signs of being slightly overbought, which doesn't do us any favors. So, as we look at the technicals there, we broke through some resistance that created some buying and newfound support, but there will be some new resistance right out in front of us here over the next 20 to 40 cents.
Wait and see for next week in South Korea for our beans. Beans technicals are down to the meeting at standard. Do you have some thoughts about the technical buying in the beans markets?
Well, it goes back to some of what I just mentioned. The breakthrough, those moving averages invited a little bit more buying as we crested them on Monday. We had some follow through Tuesday, Wednesday, Thursday, gave a little bit of that buying back on Friday as we closed the week. But altogether, a strong week, building on that turnaround that we saw last week, coming out of that $10 support that we had been kind of playing around with over the course of the last 3-4 weeks prior. And so that buying, like I say, could remain active while we test some of that overhead resistance, but it's going to need a little bit of help from the fundamentals. A story headline with China in it would be great, especially if it called out the fact that we did a deal and China's buying a bunch of beans. They are dipping into their strategic reserves right now to avoid buying from the United States, as some of the available inventories in South America have gotten a little bit tighter. So, all things considered, there's some opportunities here to take advantage of the fact that they're dipping into their reserves. But we've got to prove ourselves a good partner in their eyes, and we just haven't gotten that done yet.
Do you have some fear that we don't have a deal with China for next week? Just our beans are looking for new home for biofuel.
No question. If you look at the balance sheet on any given year, oftentimes we export half our beans and we crush half our beans. And certainly crush has grown and continues to, but it can't grow fast enough to overcome that big chunk of the balance sheet that moves out of the country. And certainly we have more partners than China, but China historically has been more than 2/3 of that demand that we have in the export column. And so as we talk about their importance to us, it's massive. And so without them in the mix, and they haven't bought any beans from us in months, without them in the mix, it's going to be really difficult to defend the idea that exports should be as big as what the projected balance sheet says it will be. And so that will become a very big weight on this market. And for every bit that we've rallied over the course of the last couple of weeks, we could lose that and then some, should we not get a deal with China, should we not bring them back to the table, and should we not have them as a strategic buyer of U.S. soybeans going forward in these next 10 months as we work our way through the 25-26 marketing year.
What was the NOPA numbers from August really quick, Mike?
Sounds good. All right, you can edit this part. You can edit this part out for me here, Caesar. I'll rephrase that. So NOPA crush data basically revealed that through the first month of the marketing year, we've crushed 7.74% of the total crush estimate. That compares to a 5-year average of 7.24%. So what that really means is that crush usage is ahead by about 12.8 million bushels. So as we look at ongoing growth there, that continues to support this notion that while we're going to not have the exports that we hope for, we are going to continue to grow the crush numbers, but maybe not as fast as we've potentially lost some of our exports.
Do you have any final thoughts about the corn demand for the future?
Well, corn demand remains strong, and the best story we've had to tell all year has been exports. Exports just kept getting better month after month, and throughout the entirety of the year, we just continued to have to raise that estimate. As we look at the 25-26 marketing year, it appears that that is really no different. Exports have remained solid. Our dollar has come down 9% over the course of the year, making us, more attractive from an exchange rate perspective. We have, gone head to head with South America on our prices all year long, and we continue to have a really high quality product to offer the global buyer. And so, you make it price competitive, it's kind of a slam dunk deal. And so as you look at the path forward, I think exports are going to remain strong. One thing that's going to be interesting in the 25-26 calendar year that might look a little bit different is feeding rates. As you talk about the 24-25 marketing year, we came through that harvest with really high test weights. Corn was just packed with energy. We didn't have to feed out as much, and I think that's what ultimately played into that final number in the grain stocks report at the end of September. But that's not true this year. Test weights haven't been as strong, and so I tell everybody we harvest bushels, but we feed pounds. And so as you look at corn today, it's not the same as what it was last year, even though it's coming out of the field just as fast. It's a different kind of corn, and so over the course of the next year, you might see feeding rates increase because A, the prices are lower, and B, they have to in order to meet the energy requirements in the diet. So as you look at demand for corn between ethanol, feed, and exports, it looks like we're going to have some really good opportunities from a demand perspective through the course of the next 10 months and maybe even beyond, depending on how next year shapes up.
Where people can find more information on your services.
Really simple. Our website address is in our name, ever.ag, EVER.ag. Just go to our website. You can find a lot of different offerings across all different commodities throughout all of agriculture. So by all means, look us up, and as you prepare for 2026, we'd be glad to help you in this effort of managing these crazy markets.
Thanks, Mike. I enjoyed our conversation for today.
I enjoyed ours too. Now I should let you go so you can get your rifle sighted in for the big buck that's coming out in a couple of weeks.
Mike North from Everett, Back Roads of Illinois.